In this video, I'm going to show you my 3 main rules that have allowed me to be profitable and make money in the market. These are the core principles of my trading plan that I follow every day, and they're exactly what I highlight to anyone who's thinking about trading futures. And rule number 1 is this: if this, then that, times 3. Trading can be a very logical and rational thought process. If something happens, then this will happen. I want to have a plan for if the market goes up, down, or sideways. So let me show you how this works on an ES daily chart. Super bullish market, but we have ourselves a triangle here. Maybe it looks like it's kind of forming this triangle pattern. So I have this marked out just in case this continues to kind of do this. Okay, I might. Let's say this thing were to break that triangle and you're a position trader. Well, if it breaks the triangle up and you want to measure a price objective to trade to, you measure the bottom of the triangle. And if price breaks above the border of the triangle, measure equidistant from the tip of the triangle, and there's your price objective over here. Now, I'm not a position trader, but breaking the triangle long or short might give me a bias one direction or the other. So let's go through the 3 scenarios here so you can see. Here's our daily bar. Let's say we've closed tomorrow, we close above. All right, I've decided this is a triangle. I respect that pattern. Now I want to know what to do with it. Tomorrow we break above the border of the triangle, but we don't break this top. Well, if that's the case, and at 9:30 we open above the previous day's high, which is at the top of this bar. Let's say we open here and price is moving up in the morning. I might take a bounce here or look to get short somehow around that line, whether it's a bounce or something else, to come back and test that previous day's high. So here's scenario number 1. Now, scenario number 2, let's say we break the triangle and the top that the market has put in. Okay, if we do both, I might expect this thing to come back in. Here are 2 scenarios, the first 2, in which I would not be getting long. And then the third, just like scenario 2, break the triangle and the top, and then price did this, kind of came up and then back tested that line, but didn't necessarily break it significantly and kind of did this. Then once we get kind of around here, maybe I'm looking to get long, just like this measurement here, and really trade up to that price objective that we talked about before. But I've got 2 shorts here, 1 and 2, and I've got an option here, which would compel me to get longer over the course of probably several days, depending on how things are looking. And that brings me to my second golden rule, and that is, don't call the top or the bottom of any market when it's on a run. And we can actually stay right here to illustrate that point. Bulls have been in charge of the ES. It's super overbought, which is a term that I don't subscribe to. I'm not sure there is such thing as overbought. There's just the reality of the market. Again, you have to be careful in these moments of like, oh, we finally get a pullback. Didn't really break that pivot here on the daily. Certainly, didn't break it, nor did we even get close to closing below. But look, if you, again, here's what we just talked about earlier too. Look, we came up, in, and then we got ourselves a kind of a fake breakout. So that's cool. And you can see how it just goes. And maybe, you get short here, you get short here, you get short here, and get short here because it hasn't broken out yet. And then, of course, it just goes. So this is just to say, don't call the top, don't call the bottoms. That is a really easy way to lose money. And it's okay to have your opinion that like, sure, maybe it is the top, but never trade on your opinion. Don't call the top or the bottom, trade at the extremes and let them develop first. Golden rule number 3, Newton's law, kind of. Every action has an equal and opposite reaction. As much as I would love to tell you that the market has equal and opposite reactions to everything that happens, it doesn't. If it did, things would be much easier for us. What I've done is distilled this down to symmetry in the market. I'm always looking for symmetry in the market. And that's kind of my version of Newton's third law, which applies, but just not quite as cleanly as it does in actual physics. Let's go through how this might look and how I use this. Here is a gold 60-minute chart, and you can see that we've got ourselves big time upward movement. I'm going to put a trend line here and show you how I apply this to my, trend line drawing and kind of expectations of the market. For me, around trend lines, something I always look for is if it happened on this side, does it happen on the other side? I might be looking for an equal distant move. And if that's the case, there are ways to use the symmetry to think about entries. This is not sole context for a trade for me. This is just added context. Let's say I see something on the daily chart that makes me think I like the idea of a long down here. And then I come to my 60-minute chart see this trend line and the fact that, oh, if it does get down there, that means we've traveled equidistant from the other side of the trend line, and maybe that support's getting long. So this is kind of the equal and opposite reaction on either side of this trend line. An action up here, and then our reaction down here. Thanks so much for watching this. Check out my other videos, and I hope you've enjoyed it, and we'll see you in the next one.